Welcome everyone. I'll just wait for everyone to join. We'll slowly see the attendees drip in. I'll give it a minute. Still people dripping in, so give it a few seconds and I'll start. Welcome everyone. All right, so welcome everyone, good afternoon, good morning, good evening, wherever you are in the world, to this webinar hosted by the Payments and Cards Network. Before I give the floor over to Matthijs Koorn, I wanted to give a bit of introduction on us. For those of you who don't know us, Payments and Cards Network is a headhunting agency specialized on the fintech space across Europe, US and APAC, with offices in Amsterdam, Berlin, Atlanta, and Singapore. On top of this, we try to add value to the fintech industry by hosting our weekly fintech podcast called In Check with Fintech. We have a quarterly magazine, we have a news platform, as well as these webinars. If you want any further information on us, please visit our website, www.teampcn.com. So without further ado, I'll give the floor to Matthijs. Matthijs is a business development manager at FSS. He's a payments connoisseur and an enthusiast. And I think he's truly the best guy to host this webinar about card and payment opportunities during this pandemic. A little bit of a teaser, if you're interested, we've also talked about card and payment opportunities with Matthijs in one of the fintech podcasts. Matthijs, the floor is yours.
Yeah, thank you very much, Rogier. Thank you very much for the kind words in terms of introduction. So today we're going to talk about the card and payments opportunity during a pandemic. I'm joined by a second to none world-class set of panelists who will introduce while trying to launch the poll. And we're going to ask you what type of organization you'll represent. And if you would like to vote during the, while I introduce the panelists, I've launched the poll. So I'm joined today by Michel Drupsteen, who's the head of mobile at ING, responsible for everything to do with mobile within ING on the retail and the commercial side, so the B2B bank in the various countries that ING is active in. I'm joined by Matt Griffin, who is the head of key accounts at Nets, a large pan-European processor with Scandinavian roots. I'm joined by Paul van Alphen, airline payment expert and founder at Up in the Air Payments Consultancy. I'm joined by Angus Burrell, who is the Senior Vice President of Retail at Emergent Pay, a acquirer, and we'll hear today an issuer with roots in Eastern Europe and a large presence across Europe. And last but certainly not least, I'm joined by Narendra Nandal, the head of issuing at FSS based in Dubai. Gentlemen, thank you very much. Great to have you on the webinar today. We have a set of questions that we'll go through, and I've just looked at the poll. We have 11% representing an issuer, 10% from an acquirer, and 78% from other. So I'm actually very curious to hear what is other. I had not quite expected that skewed, but that's interesting. Thanks very much for voting, everybody. So we'll take it away if I can close the poll. There we go. All right, so the first question is the impact of the COVID-19 pandemic. Any observations to share and anything specific to in new innovations? Has innovation stopped during the pandemic? I think, Michel, I think you have some interesting insights on that.
Yeah, thank you, Matthijs. Maybe we have a couple of insights that we would like to share indeed. Maybe one of the most peculiar insights is that the average ticket size, so the bill for visiting a hairdresser, went up from 35 to 40 euros in the Netherlands prior and after the lockdown. So that was one of the insights that we measured among the spending of our customers. But of course, we see a number of other things as well. I think you can divide them in 2 or 3 things. Of course, during the lockdown, people want less contact, fearing any virus spread, etc. So less contact means in a number of markets, in multiple markets, contactless. So in several markets, we saw a huge increase, a couple of percents indeed, or even more in 3 months' time, increase in contactless payments. So I think that's in general for all of our retail markets where we saw that effect. The second one clearly is if there is a need by our consumers of less contact, there are also other solutions available beyond contactless, and that has much to do with the use of the smartphone. So you could imagine indeed use cases and payment solutions where there is no contact at all, no contactless, but even less contact by dropping a package at the door and I finalize my transaction on my own smartphone without ever tapping or touching anything. And lastly, of course, it's about cash. I think the increase in expenditure on contactless had a lot to do with the reduce of cash spending in shops. We do see their graphs heading up again in terms of usage of cash. But we clearly believe that the pandemic will be a catalyst for a faster reducing of cash usage in the coming months and certainly years. So we're increasing there the pace of less cash without being cashless, of course. That will take a while before countries are cashless.
And any observations, Michel, on the form factor physical card versus mobile?
Yeah, clearly. So as I said, indeed, contactless is I think the form factor that most of us or all of us know, and that's really a mature product already in all of our markets. We also see in some of our markets, but we're also busy in better measuring that. The use of smartphones. As you know, paying contactless in shops you can do with your card or you can do with your phone. In some of our markets we saw a clear increase as well of customers that only use their mobile phone instead of their plastic card. And so what we call mobile-only customers. Majority of customers is using both the card and the mobile. But we see a relevant increase there in people and customers that only use their mobile for doing in-store transactions. And I think that will, this pandemic, which of course has all kind of downsides, obviously, but yeah, it's also a catalyst indeed to create the additional awareness on how digital can be used. And let people get used to it, indeed. We don't have evidence on that, but we clearly believe that certainly in online spending, there were a lot of first-time users, especially in the 50 or 60 plus age group. A number of customers that did their first online transaction.
Wow.
That's also of value.
Yeah, incredible. Narendra, anything from your perspective in terms of infrastructure and systems?
So just to quickly also summarize what Michelle was saying, I'm seeing three big trends which are happening during this pandemic. One is obviously the whole consumer behavior is changing from contact cards to contactless cards. And that is giving rise to a huge amount of change at the back end. And you have to kind of to enable the consumers to start going and doing these transactions at the merchant's place. So at the back end, the whole tokenization is up on the rise. Uh, the how do you kind of provision the cards, the contact cards into a contactless format so that people can go and do the transactions. So at the back end, the infrastructure is gearing up to kind of start enabling these kind of transactions. The second thing, as and what also Michelle was kind of adhering to, was there are newer categories which are coming up. Like for example, more and more older people are doing the transactions for the first time. The form factor is changing from a card to a mobile form factor, who then are going and doing the transactions on the merchants themselves are going from the offline to the online space. So a lot of momentum is kind of getting shifted towards digitization, and at the back end to enable these processors like FSS, or companies or the technology providers like FSS are gearing up to enable these transactions for the end consumers and the end merchants. Another thing which I'm kind of seeing the trend in the last 6 months during this pandemic season is, uh, since most of the merchants, they are not able to take on the whole cost of technology onto themselves. So there are a lot of partnerships which are happening. So the schemes are coming along with the merchants, both on the issuing and the acquiring side, and they are enabling partnerships. So, for example, even a lot of retail merchants, like large retail merchants, who have interest on the retail shops and giving different kind of services, are partnering with the loyalty guys, are partnering with the payments guys, are partnering with the uh, end uh, merchants, right? So together, the whole ecosystem is coming together, and partnerships is the new form factor which is coming up, which is giving rise to something like open banking systems, super apps, and that is where the world is moving towards. And how payments are becoming more and more back-end, in the sense they are becoming more frictionless, more just pass-through mechanisms. That's where the trends are heading towards. Uh, in fact, like industries where we are seeing, there's a drop off, or which are most affected by this pandemic, like the travel industry or the hotel or the hospitality industry. Even those industries are kind of innovating to attract customers. Like in the normal fall of business, these industries, and maybe Paul can add more views on this, because he's been into this industry, how they are innovating into uh, enabling payments and cards.
Maybe it's good to add, Matthijs, that the trend, you asked the question about form factor. We're a clear believer in the mobile phone, like most of the parties, obviously, but we really saw that that change in trend and the acceleration of behavior, mobile behavior, starting in 2019 already. And the pandemic, during the lockdown, obviously you see some declining transactions, but we really think that this will be an accelerator for a faster pace to go digital and to get our customers getting used to digital.
Yeah, and I think a mobile first strategy, and Narendra mentioned partnerships. I think Michelle, recently ING also launched a token. I don't know if pilot is the right word, or if it's already a product
Yeah.
with a large retail, but very much in partnership.
Yeah, but it's well, a couple of things. So we are a clear believer, and Narendra indeed mentioned that. I think the need for partnerships and working together, co-creation is only getting bigger. We see a clear need and demand from our business customers, merchants indeed, who are in need of some help and some assistance indeed to be helped in, okay, what kind of customer journeys do we have? How can we improve things? Last year we did some small experiments there with a large retailer, large supermarket indeed, on a self-checkout kind of digital store. So no employees, no cash register, using your contactless card to check in, to do the shopping, and you walk out with all kind of other technologies that was provided by that supermarket. Recently, we announced the pilots that we will start coming quarter, so in Q4, together with Albert Heijn. And that is indeed based on tokenization technology, scheme tokenization to be precise on that one. Because we believe that that's one of the technical enablers to create and shape new customer journeys, or to enhance some existing customer journeys, either online or in store. Definitely. So tokenization is one of the key technologies that we're aiming for, that we're already working on, of course, with solutions that we have in place, whether it's paying with your wearables or Google Pay, Apple Pay, or paying with your ING app in the shop. So it's an underlying and very important fundament indeed to create all kinds of new use cases, and to support multiple form factors there as well.
Yeah, exactly. That's an interesting bridge. And I'm going to come back to the travel in the next question. But I think this is an interesting bridge, I think, to both Matt and Angus. From an issuing perspective, we see people using their card. We see it's very interesting to hear that 50, 60-year-old doing their first online transaction. I'm actually a little bit baffled by that age, not having done online transactions. But I guess there's a learning point here for everybody. But and I think particularly Angus, coming from the acquiring world, is issuing now the new competitive field? How do you see that?
Yeah, good question. I think, I mean, we're an acquirer on one side, as you know. We're also a payment gateway. We operate all sorts of, all manner of alternative payment methods and mechanisms internationally. We are an e-money license holder and an issuer, so we're, I guess, getting going in that space, and I'll come on to a few areas on that in a minute, if I may. But I think, well, I mean, I'm surprised as well about the adoption of mobile by sort of 60-year-olds. I know that my mother still writes me a check now and then, but I think she's pretty extraordinary in that way, and I'm simply pleased that I'm able to cash my checks in using my mobile, because otherwise I'd be going to the bank. But so things have moved forward a lot in that sense. In terms of acceptance and issuing, I think they're hugely complementary. And to the sort of previous question, as it were, I'm finding that there's a great interest in businesses for being able to issue cards, and use companies like us to issue cards for them to be able to pay employees. The ability to make really quick, seamless payments across and have visibility of what's going on between those accounts is really key there. And I think there's, I think there will be, whether it's going to be immediate, whether it'll be over the next 2 or 3 years, perhaps things will be held up by COVID, perhaps they'll be speeded up by COVID. But I think there will be a change in the way that we are paid as individuals by our businesses over the next decade, without question. I think it'll be much faster, quicker, more seamless, just instant payments. It might not necessarily be monthly. The systems we have available are changing, and that's where we are able to help there. There's also large brands are looking at issuing cards. It's already started with some brands across Europe, but large brands issuing cards. You know, those of us on the call and those listening who are in payments will know that there's a huge advantage to being able to issue a card, which means that you get a nice little share of that interchange. So, you know, that also, I think I mentioned to the panel when we spoke a couple of days ago, there are a number of charities who are looking at the ability to issue cards to their donators or donors, whether they be giving 10 euros a month or 10,000 euros, you know, they can still get money back in from that spend and see that as a way to keep that consumer loyal to their brand. And I think it really, for me, everything, my core business, what I love is UX, is understanding the consumer. And I think that to a certain degree in payments, we tend to go a little bit too far, and we tend to try and force things on the consumer that they're not ready for. And I think we really need to learn and listen to what the consumer's doing. I mean, I noticed one question on the list there, which is asking about the change from contact to contactless and how that's going to survive in physical stores. We're actually interestingly looking at ways of securely being able to enable consumers to make payment in store without touching any device other than their own smartphone, which they will be comfortable with. They know where it's been, hopefully. So they're not concerned about lots of other people having touched that. So I think for me, issuing and card acceptance, they go hand in hand, and we play a huge part and will increasingly play a big part in usability for consumers and understanding what the consumer wants to do, their speed of adoption and how they want to be able to make a payment, as well as enabling those payments out, giving brands and businesses the ability to issue cards to make life easier for consumers ultimately.
It's good to mention that, of course, most of us, well, at least let me speak for myself, are payment nerds, indeed.
Well, that's it, yeah.
There's also a level of what our customers and consumers in general can handle. We think that we can throw a number of innovations on the market, but there's only so much that a consumer can handle and is willing to change its existing behavior. We as ING did recently a survey indeed about the willingness of consumers to extend or to have more payment options. Well, there are clearly some psychological factors that play a role there in what a consumer can handle. There's only so much different payment methods that a consumer can choose, and for sure there will be much more payment methods on the market than consumers can handle, and there will certainly be a shakeout in the coming years as well.
I think just adding to that, I was looking yesterday that it can be a long road to be an overnight success. So we're all talking about contactless. I mean, I remember the first contactless payment in the UK on an EMV card was in 2007. So whilst it's flavour of the month now and the mainstream press are highlighting the health benefits and all of that, it's the adoption has been steady and slow, and I think there are tremendous opportunities with things like open banking and the convergence of different payment rails. And I like what Angus said around the fact that I think a lot of the people on this call and companies we work for are in a great position to help people who the barriers to offer payments to their customer previously were just too high, too expensive. I think that's coming right down, and that payments will become an extension of the customer experience in a different sphere. It will stop being its own kind of isolated island where banking is something that people know they have to do, and just be more absorbed and embedded into, like Uber is. I guess that's the genius of that. They took the payment and the waiting for the taxi and made it just seem like part of the journey. So I think that's where I think we will start to see things develop, and that what's happened during the pandemic has really accelerated a lot of things that we already held to be true. So the focus on UX, the automation need for that, and artificial intelligence firming up some of the back end of things. I think. Sorry, go ahead.
So one of the questions that came in is Matt, and you kind of alluded to that a little bit, is are Visa and MasterCard or are the card schemes under threat by all these developments?
I mean, it'd be great on one of these things to be really controversial. Say, yes, they are dead. You will not hear of them. But I mean, Visa and Mastercard are two of the wealthiest companies in the world, and they have known for some time that the traditional Visa and Mastercard rails are, whilst they have tremendous value and longevity, they've been investing in other. I mean, look at Net. Mastercard is investing in our account-to-account payment piece. They bought VocaLink. Visa have made significant investments in installment lending and things. I think that their businesses will shift, but their existing business will take a long time to truly tail off, and that they're making many bets in many markets on the future. So I don't think we need to worry for Visa or Mastercard. Would be my
What was really interesting,
just to add, sorry.
said earlier.
Just to add what Matt was saying, you know, like Visa and Mastercard might have started as card companies, but they are more of a network company, and Mastercard's acquisition of VocaLink and Visa's acquisition some of the other companies is a way forward where, you know, at the end of the day, they connect the issuers and acquirers and the members. They enable the payment rails. So they are here to stay. It's not that these companies would kind of fold up. They are here to stay. The business models will change. The payment flows will change from a pull-based card system. It will be more towards push systems, like what Nets is into, the account-based payments. So, you know, so the shifts will happen in the business models. At the end of the day, what gives convenience to the consumers and how the consumers will go and do the transaction is where the focus would be. And that's where we are seeing most of the shifts. And as what Matt was saying earlier, you know, like it took about like 7 odd years or 10 odd years for the contactless has been there, right? But the COVID situation, in fact, has changed the whole consumer behavior. And what I was in a call with some of my Visa colleagues, and they were saying, you know, like 3 out of 4, literally 75% of the people are now moving towards contactless. So that's where the trends are. And we have to, as technology companies at the back end, we have to basically enable and give the technologies out both on the issuing and acquiring side. And obviously as wrappers on the recon as well as fraud management side to enable these transactions. And maybe, you know, like payments would keep on evolving, and you know, like more and more Uberification of the payments will happen.
I think it's down to trust from the consumer as well, isn't it, really? I mean, I think that the whole thing about, you know, Visa, I go back to the poor example she'd hate me talking about her, my mother, but, you know, she knows, she knows, or she believes she knows what Visa is and what MasterCard is, and it's a brand she trusts, you know, and it's the same with many consumers, although with, you know, millennials and Generation Z, that's changing, but we, you know, I still bank with HSBC. I've got so many other bank accounts I almost can't tell you, and that's because, like you, Michael, I'm a bit of a payments geek and I'm interested in how they work and the UX and what that can do for me. But my main bank is HSBC, and that's been the case since I was probably 15. And I think across Europe, the majority of people still operate in that way. And along with that, Visa and MasterCard are brands which are trusted. The consumer believes that their funds are secure, and that if anything goes wrong or if their card is stolen, they're protected in some way with that. So I think it'll take a little bit to change that. And I think open banking is making a massive difference. And the likes of a lot of the, you know, certainly on the issuing side, whether we're talking about physical card or account, a lot of the challenger banks, the N26s, the Monzos, Starling, Revolut, etc. When it starts to come into open banking and you can see all of your accounts at all different, from all different banks and financial institutions, and maybe some lending you've got in place and some funds which you owe all in one place, for a consumer, it's all about convenience. And it's now about what they can do from their mobile device and almost nothing more. And as long as there's an app for it on iOS or on Android, then they're probably going to trust that it's usable and wait until something goes wrong, because it's so easy to make use of.
So skipping to travel, Paul, you've been very quiet. But we alluded to some verticals have been hit more than others. I think travel, and particularly airlines, has been hit very, very hard. How has that industry coped with the reversal of incoming flows to practically overnight moving to a kind of a refund environment?
Yeah, good afternoon. Yeah, I think first of all, if you look at customer behavior, let's say moving forward, definitely there will be impact. But bear in mind that travel, but also like events and festivals and concerts, that kind of stuff, you pay in advance. So easily a couple months to booking in, let's say January for departure during the spring or in the summer, and that happened already this year as well. So when COVID hit us, let's say mid-March and end of March, the borders started closing and airlines started to cancel flights, then all of a sudden 95% of the flow reversed. That meant that everything that was already paid for and in most cases already remitted to the airlines or the travel agencies or the tour operators. Flights got canceled, and the tour operators, the travel agencies, the airlines all started to be very worried about their cash flow. They had to go into kind of a refund mode and said, okay, how can we, first of all, get that operationally organized with their staff being furloughed and all of a sudden seeing like 10, 20, 30 times more refunds than usually. They really had to adapt to that. And the airlines, for instance, started to issue vouchers for future use, sometimes with some form of a bonus on top of it to at least make it more like an incentive to make more acceptable for customers to leave their money with the airline or with the travel agency or tour operator and then book at a later stage. Well, fast forward 6 months, we've seen delays in refunds 3-4 months. A lot of customers obviously were affected by that. They needed that money very, that was very much needed for other expenses, and people got like laid off, stuff like that. So it was quite it is still, but it was definitely earlier this year a very, very difficult situation for the industry. It's and the outlook is still very, very, very difficult, by the way. If you look at forward bookings, then yeah, you'll see also that the behavior will change. We talked about already contactless, or at least I see a boost coming from the face-to-face payments using your card in a mobile wallet like an Apple Pay, for instance. That has become way more common. And I think one important aspect with these kind of prepayments is that if it's a long waiting for a refund, if it's the risk of a supplier going out of business and then being out of money, being out of pocket, I think protection, customer protection is a very important factor now. And we just touched on open banking payments at least, and although wonderful and there are great use cases for that, I think where you have prepayments and there's uncertainty about the service actually being delivered, there's currently no consumer protection built into that. So I think the banks still have to come up with a solution where there is a dispute possibility that the customer can actually claim their money back if they have booked directly with an airline, for instance. If you're in the UK, if you book a package and you're protected by the Consumer Protection Scheme, APTA, but not with a direct booking. So there are a lot of things there, and from an industry perspective, again, the flow went into reverse, and the liability with the acquirers, for those transactions, in case they're not delivered, and the transactions have not been refunded yet, is with the acquirers. So the acquiring community became very nervous about their outstanding liabilities with all these parties that deliver services in the future, and that's where now a lot of work is done to see, okay, how can we manage that better than we do what we did before. And I think a lot of the aspects were like this, we were aware of it as an industry, but it was not broken, so there was not really a priority to fix it. COVID broke a lot, and I think that will, and I think it was mentioned before, that will give us the opportunity to really take up steps back, to do a reset and to come up with innovations and let's say digital transformation that will make us better equipped, for a sustainable ecosystem towards the future.
And Paul, when we were talking in preparation, you said that there are initiatives underway to make these vouchers almost like an alternative payment method. So consumers can buy and sell them amongst each others, and I guess airlines can collateralize them and sell them to get cash.
Yeah, that's a tricky one. I think first and foremost, the airlines' priority is to keep the money on their own accounts. So, if a flight gets cancelled, that money is spent towards a future booking. Or you see some instances where you can convert it into miles and use those for something else. Or you can use them with a partner airline. But I'm pretty sure that there will be innovative business models coming up where it is more likely, more likely for the customer to accept that voucher, because that's always better from an airline perspective than issuing a refund. Because then it's likely that they'll use that money for something completely different, or to book on a different airline. So that's the main priority. And looking forward to see what kind of business models will come out of that. But again, as long as that money, it's a service not rendered or it's not converted to something tangible, it's like, let's say it's used, then the liability is still with the acquirers. So the acquirers are keeping a very close eye on that to see what's happening with that booking, with that voucher, when it's issued, when it's redeemed, and how can they monitor and measure their liability and keep also the banks behind them or at ease. Yeah.
Do you think this will have any impact on virtual cards, which was really on the rise?
Mm-hmm. Oh yeah, definitely. If you see that travel agencies typically pay airlines either through the IATA clearing system, which is kind of a billing settlement system, or they use virtual cards or the cardholder, the customer's card itself. But with the built-in protection for virtual cards, it protects the travel agencies for against bankruptcies of the suppliers, so that they can then instantly refund their customers, and they can use the regular reversal process, the dispute management process, to get their funds back. So we see a significant growth in for those bookings that still take place, because the numbers are way down. But the share of wallet for virtual cards is growing. To protect the travel agencies, but also to a certain degree to protect the airlines in case, in that bill settlement plan, the travel agency in the end does not pay for the booking, but the airline is, under the IATA resolutions, they have to supply that service, because that's one that needs to happen when the ticket is issued.
Okay, we taking the step from keeping the topic of virtual cards, but making the step to B2B. Which is a new area where virtual cards are rising. Fast and instant B2B commerce. Angus, is that something you are seeing on the acceptance side, or talking to companies? And you were alluding to that a little bit at the beginning, being both issuer and acquirer.
Yeah, it's a really interesting one for us, because we actually are, I guess, part owners of a solution which is right in the BNPL space, so buy now, pay later, which, as we all know, is growing and has seen a massive increase in growth during the COVID-19 pandemic anyway, with consumers buying online, the ability to buy online, not only knowing that they can refund things, particularly in clothing, if they don't fit or the color's not quite right or whatever, but also to be able to buy it and not pay for it and send it back, having basically paid either very little or nothing, is a massive advantage to a consumer. And so it is a solution that we have. It's called Noosa, Noosa. It's actually live with a large Italian retailer called OVS. A very interesting solution which enables lending banks via API to integrate and become lenders to consumers in real time, both in store and online. In store, it's completely contactless. and the consumer then pays 25% using a card or card details, if you like, which are uploaded onto the app. They will then pay 25% at point of purchase, 25% 30 days later, another 30 days later, and so on. So over 4 months, they've paid the full amount. Now, what's really interesting about this is that the fastest way for us to efficiently make the payment or enable the payment to be made from the bank to the retailer, who receives 100% upfront of that. So the bank is taking the risk, and this is what's the joy to the consumer. The fastest way to do that is with a single-use virtual card that we would issue, and that's paid straight out in a business-to-business manner across to the retailer who's enabling that consumer to make a payment. And for me, it sounds sad, doesn't it? It's really exciting. But so for me, that's quite exciting, because it does change these batch payments, and where, has something gone wrong with a batch, and we've got to consolidate everything, and we then have to try and reconcile. No, it's an individual payment. It goes straight across. The reference for the retailer can be quite simply reconciled against that payment if there's a refund or a part refund. But it speaks very much to what you were saying earlier, Matt, about the Uber experience, where you're embedding everything into that. And I've said this before, actually, on another panel not that long ago. It just strikes me, I love payments, obviously. Hopefully I wouldn't be doing this if I didn't. But even with my love of payments, I don't think I've ever walked out of a store or completed a purchase online and sort of gone to myself, oh, what an amazing payments experience. Because that's just not what you think of as a consumer. You don't want an amazing payments experience. You want a good experience, and the payment should just be a part of that. So, where we are with both acceptance and issuing of cards is enabling the consumer to do everything as easily as possible, buy what they want, when they want, how they want, and do the same for refunds. And if that means giving a retailer the ability to issue cards, be they virtual, single use, or physical cards, or for us to be able to issue cards to enable payments from business to business, then I think it's a really efficient way of achieving that goal.
So Angus, a question for you. The Uber experience is well known. Unfortunately, with the EBA introducing two-factor authentication, also the Uber experience, as long as you don't whitelist Uber, is also gone now, because you have to authenticate yourself, when you order a ride. So one way we want to make it as seamless as possible, the whole UX. On the other side, we see that some people are so afraid of the fraud component of accepting payments that they're trying to ruin it again. So what's your view on that?
I think I'm completely with you, by the way. But I think that SCA is, I was going to say in theory, then that's probably wrong of me to say that. It does protect both the consumer and the merchant, or in my case specifically the retailer or travel business for you, Paul. But I think that's a classic case, possibly, of our industry enforcing something which consumers are not necessarily ready for, and we haven't properly explained it. I mean, if I go back to 3D Secure, not 3D Secure, chip and pin. I remember years and years ago, it first came out, I was in a pub. This is before I lived in London. I was out in the country in the UK, and the publican, who I was getting to know relatively well, which is probably not a good sign, he just got his first device which enabled him to take chip and pin payments. And there's a guy at the bar, he's buying a beer, perfectly normal scenario, early in the evening, and the publican at the bar, he had screwed the terminal, the device, to his side of the bar. So he immediately asked the consumer for their credit card, put it into the machine, and shouted across the bar, "Can I have your PIN number?" So, and you think, well, this is a classic case of the cards and payments industry not clearly communicating to everybody how these technologies that we're putting out to consumers should be used. And I think, there's always going to be faults with SCA, whether it's facial recognition, whether it's fingerprint, whatever the method is, whether it's whether it's dual factor authentication, and oh no, I've forgotten the login to my Gmail account where everything goes. I think it's all of this technology that we're using to try and make things secure does require both us to educate and the consumer to get used to. So I'm not sure I necessarily answered your question, Paul, but I think there's a bit.
Well, it did make me think though about this case where I think it was also in the UK that someone told me once that for snooker tables or pool tables in the US, that the coins were taken away, that you could only pay with a contactless card, and that apparently you used to put a pound coin in there as your up next, right? Yeah. So that's also where there's a mismatch between day-to-day behavior and payments. It was just a funny case there.
Yeah, exactly.
It's a good example. Matt, any observations from your end? You guys work across a lot of different issuers and a lot of different business cases.
Yeah, I think it's an interesting point on the SCA thing just there. I think the UX side of that and the impact on the customer, Angus is right, it has to catch up to where the regulator has put the hurdles in. And I think we risk, as we did with 3D Secure initially, turning customers off and actually making things feel less secure than they feel today. And I do think it's also the case with open banking that, and again, I think it was Paul that mentioned it, where we don't have those safety rails in place that exist on the more traditional form factors, and we need to have those. Otherwise, we risk pushing something out before it's ready, having negative experiences at the customer level, and that they're turned off of that and they don't get the tremendous benefits that are on offer through these things. So I think it's a constant. I think that most of broadly the regulators have done a better job recently than 10 years ago in trying to address the end customer rather than just trying to hammer American companies. But I do think it's on us in the industry to help bridge the gap between the consumer and that regulation in a way that really adds value to them.
Maybe it's good to stress indeed, because I hear you saying or using the word hurdle, and very often when talking about SCA, friction is being thrown on the table because SCA is difficult. And I think more and more, and I think the regulation and all the exemption options and the technologies that are available do provide the options to issuers to create a compelling UX. But you must be able to do so. And a very nice example, I think most of us, that's my assumption at least, have done an Apple Pay transaction. Well, Apple Pay clearly uses SCA in an EBI and RTS compliant way. But I think if you ask the customer if they have experienced any friction when using Apple Pay, I don't think that they will say, yes, there was quite a lot of friction, although it's an RTS compliant and SCA supported solution. So it really comes down to more and more to creating and getting the right combination of regulation, exemptions, SCA technologies, etc. And there are certainly ways to create compelling customer experiences there. Not always SCA has to mean hurdles, frictions, etc.
As a final thought, because we've kind of come towards the end of the webinar. Any thoughts on the SCA deadline? Will we make it? Will there be, I don't think there will be an extension, but will we see an extension? Will we see exemptions perhaps, like the Uber example? Any thoughts from anyone?
Well, it's a difficult question to answer in general. When talking about exemptions, whitelisting was mentioned during this webinar. For example, American Express already uses whitelisting. They call it Express list. So there are some first examples there in the market. Yeah, whether everybody will reach the deadline end of the year, and some countries like the UK took the liberty indeed to extend the deadline already. Let's see. As ING, we are fully working on it and convinced that we can meet the deadlines, but it's hard to answer that one in general, of course.
True, but yeah, it's a webinar, so we
of course
to always try to go for the edge. Matt, any thoughts?
Michel, Michel, I think you're also, in hindsight, the timing of ING launching Apple Pay in the Netherlands was quite fortunate.
Fortunate for what?
No, that you were ahead of the of the pandemic, and that people had already Pay installed and had already used it. And now also they got boost, from the whole contactless, and I think that will help also the adoption of two-factor authentication in general.
Yeah, well, to an extent, you can organize a separate webinar on big techs, etc. But on those aspects, we can learn on how they're looking at customer experience and what to bring to the market, indeed. And clearly, Apple Pay brings a boost in making people aware and giving trust to people that they can use the smartphone for financial transactions and payments. And not only now on Apple devices, but also on the other devices that we support in not only the Netherlands, but on multiple markets, of course.
I think just on the SCA question there, Matthias, I think, well, I speak for the UK here, maybe across Europe. I think it's unlikely that everybody will make it. Hugely unlikely. I also think, I was at a really interesting retail event yesterday, actually, which was allowed to go ahead. Quite why, I'm not sure, but it's a licensed event. We were driving ridiculously fast race cars around a track, so it was very COVID-19 friendly, and you can imagine why that was an attractive event to go to. But when we weren't driving cars fast around a track, we were obviously talking about all these things and problems. And, quite honestly, retailers, SCA is almost the last thing they're thinking about. They've been beaten into the ground by COVID-19, and they're trying to do everything they can to get themselves back up. They've been supported certainly in this country by the furlough scheme, but that can't last forever. All they want to do is try and think about ways in which they can entice consumers back. And I firmly believe that if we can, as an industry, help retailers and any business where a consumer wants to make a payment do that as easily as possible, then we'll be much better off for it. Yes, I think SCA will happen. I think it's going to happen at some point. I don't think it should be an urgency for it to be completed on time, as it were. I think there are more important things in the world right now.
All right, I think with that, we come to the end of the webinar. I would like to thank all the participants, and I would like to especially thank the panelists for taking part. I browsed through the questions. We have not answered the questions directly, but I think through the talk track, we have actually answered most of the questions. So many thanks. Thanks again for the attendees, and see you at the next webinar. Thank you very much.
Thanks, everyone. Please connect on LinkedIn if you want to. That would be great.
Yep. Thank you, everyone.
Thank you.
Bye.